San Francisco-based DocuSign just announced that it plans to cut 9% of its workforce. The former tech unicorn also said that it will restructure its company. DocuSign is now just the latest technology company to announce layoffs. Has the end of the age of the Silicon Valley unicorn finally come to an end? Will this restructuring and downsizing enable DocuSign to survive and become profitable? This video continues our coverage of the wave of layoffs sweeping the United States. What does it mean for big tech companies? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. DocuSign announced that it will lay off 9% of its employees and restructure the company. The restructuring plan is intended to underpin the future growth of the company. And it is designed to bring DocuSign to profitability and improve its operating margin. DocuSign has about 7,500 employees. The layoffs and restructuring will be completed by the end of the fiscal year 2023. DocuSign stock rallied by over 5% on the news of the layoffs and restructuring. The company said that it will take a $40 million charge off related to the restructuring. For those of you not familiar with DocuSign, it is an electronic signature software company. DocuSign rode the wave of investor interest that many technology companies enjoyed during the pandemic. During the pandemic, many people and industries began to rely on electronic signatures as consumers. But as the pandemic has come to an end, interest has died down. DocuSign stock has fallen by 65% so far in 2022. A number of Wall Street analysts downgraded DocuSign stock after a huge earnings miss in Q1. CEO Dan Springer resigned after the monumental earnings miss. Alan Thygesen, a former Google executive, will become the new CEO. DocuSign is headquartered in the South of Market District of San Francisco. About 670 of the 7,500 employees will lose their positions. DocuSign was one of the many high-profile tech unicorns. It had an enterprise valuation of $3 billion when it went public in 2018. DocuSign software enables fully electronic signatures across many different types of devices. DocuSign has experienced rising and falling fortunes as the pandemic came and then went. Just like a lot of other tech companies, it hired fast during the pandemic. Now that the pandemic is over, the layoffs seem to be occurring just as fast. We are recalibrating our team to address the rapidly shifting market dynamics, the company said in a press release. This week we made tough decisions to reduce our workforce to adjust to our changing business priorities, the press release continued. This was not a move we made lightly or in haste, the release also noted, but was necessary to ensure we are capitalizing on our long-term opportunity and setting up the company for future success, the statement added. DocuSign has physical offices in Seattle, London, Israel and Tokyo. Events at DocuSign are increasingly common these days. After more than a decade of stratospheric valuations, the unicorns are facing a scary future. Silicon Valley is in the middle of its worst sell-off since the 2008 Great Recession. The pandemic economy was like a dollop of high-fructose corn sweetener dropped on tech companies. The boom created by the pandemic sent tech stocks soaring. But now quite a few of those tech stocks have experienced their worst 6 months as public companies. For example, Peloton, the connected exercise bike startup, is a case in point. Peloton shares are now trading at $17, which is down from their all-time high of $163. The board of Peloton is reportedly looking to sell a minority stake in the company to a new outside investor. Investor sentiment in Silicon Valley is the most negative since the dot-com crash, said venture capitalist David Sachs. Unprofitable tech companies may not survive an economic downturn. These unprofitable tech companies have come to be known as zombie unicorns. In other words, they are billion-dollar startups that cannot survive on their own. Google and Meta platforms reported decidedly disappointing Q2 earnings. Meta has begun quietly pushing out a significant number of employees. The company has restructured departments and given employees 30 days to find a new job within the company. Analysts expect these reductions to be a precursor to deeper cuts. The United States is now teetering on the brink of recession and the digital ad market has plunged. Google, Meta, and Snap are probably the most notable of the companies reducing headcount. But there are many others. This year, it is clear that Wall Street analysts are valuing profitability over prospective growth. Last week, Twilio announced the layoff of 11% of its employees in a broad financial restructuring. The layoff will affect up to 900 Twilio employees. The Federal Reserve is aggressively raising interest rates. Despite the wave of layoffs sweeping the United States, people seem to be able to find new jobs in a matter of weeks. There are going to be more layoffs. Another survey from PricewaterhouseCoopers shows that half of all companies expect to lay off employees within the next 12 months. Google, which has not yet formally announced layoffs, said that there would be an overall review of sales performance and performance in general. According to the report, the warning states that if third-quarter results don't look better, then there will be blood in the streets. Last month, Meta Platform CEO Mark Zuckerberg told employees that the company plans to reduce its hiring target for engineers from 10,000 to between 6,000 to 7,000 amid the market downturn. Realistically, there are probably a bunch of people at the company who shouldn't be here, Zuckerberg said. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.